Hello everybody. On 1st February this year, the Honorable Finance Minister Nirmala Sitharaman shocked the nation by announcing that the government has proposed to impose a straight 30% tax on profits from cryptocurrency trading in India. Before this announcement, many investors and entrepreneurs were confused about the government's intentions to either recognize cryptocurrency as a legal tender or completely ban it. But by introducing a tax system for virtual assets like cryptocurrency, the government probably seems to legalize it in India. So in this video, we are going to discuss the history and the future of cryptocurrency in India. And of course, the main question, will the government of India recognize virtual assets like cryptocurrency as a legal tender? Let's discuss these points and try to arrive at a conclusion.
For the taxation of virtual digital assets, I propose to provide that any income from transfer of any virtual digital asset shall be taxed at the rate of 30%.
It wasn't as if we have legitimized them. We haven't said that this is currency. We haven't said that this has intrinsic value, but certain operations are taxable for the sovereign, and that is why we've done this.
Now, before we dive into the main question, let me clear some basics first. A cryptocurrency is a digital currency and an asset which does not exist in any physical form, but it is designed to work as a medium of exchange through a computer network that is not reliant on any central authority, such as a government or a bank, to uphold or to maintain it. For example, Indian rupee is controlled by the Reserve Bank of India, and similarly, United States Federal Reserve controls the US dollar. But for cryptocurrency, there is no such bank or central authority to control it. Explaining further, cryptocurrency is a tradable digital asset or digital form of money that only exists online, and this currency uses encryption to authenticate and protect transactions. Bitcoin is the first decentralized cryptocurrency ever created, and as of today, there are currently over 1,000 different cryptocurrencies in the world, such as Ethereum, Ripple, Dogecoin, etc. Now you might be wondering how these cryptocurrencies work, and that too online. Well, there is a simple answer to this question, and that is the blockchain technology. A blockchain is a distributed database that is shared among the nodes of a computer network. As a database, a blockchain stores information electronically in a digital format. Blockchains are best known for their crucial role in cryptocurrency systems for maintaining a secure and decentralized record of transactions. The innovation with the blockchain is that it guarantees the fidelity and security of data and generates trust without the need for a third party. Another major advantage of using the blockchain technology is that this technology is decentralized, which means that the data is not stored at a single location. For example, imagine that a company owns a server farm with 10,000 computers used to maintain a database holding all of its clients' account information. This company owns a warehouse building that contains all of these computers under one roof and has full control of each of these computers and all of the information contained within them. This, however, provides a single point of failure. What will happen if the electricity at the location goes out? What if its internet connection is cut off? What if it burns to the ground? What if a hacker erases everything with a single keystroke? In any case, the data is lost or corrupted. What a blockchain does is to allow that data held in that database to be spread out among several network nodes at various locations. This not only creates redundancy, but also maintains the fidelity of the data stored. Now, suppose if somebody tries to alter a record at one instance of the database, the other nodes would not be altered and thus would prevent a hacker or a bad actor from doing so. That means if one user tampers with a particular cryptocurrency's record of transactions, all other nodes would cross-reference each other and easily pinpoint the node with the incorrect information. This system helps to establish an exact and transparent order of events. This way, no single node within the network can alter information held within it. And hence, with the help of this technology, by spreading its operations across the network of computers, blockchain allows Bitcoin and other cryptocurrencies to operate without the need for a central authority. With this, I hope you understand how cryptocurrency works technically. Now let's try to understand how its value is determined. The value of cryptocurrency is determined by a simple concept of economics, that is supply and demand, just like anything else that people want. If demand increases faster than supply, the price goes up, and if supply increases faster than demand, the prices go down. This same supply and demand principle applies to cryptocurrencies. A particular cryptocurrency gains value only when demand rises higher than supply. Now I hope you understood the basics of how cryptocurrency works. Now let's discuss the timeline of cryptocurrency in India. Cryptocurrency has been in the news lately following volatile price swings And with a boom in trading induced by the lockdown, that meant several newcomers have started to invest in the crypto asset class. But the sword of uncertainty hangs heavy on the cryptocurrency market in India, with policymakers in the parliament showing their discomfort with this market quite clear through various suggestions and decisions in the past. Here's a quick history of the cryptocurrency market in India. In 2008, a person or a group of persons operating under a fictitious name, Satoshi Nakamoto, publishes a paper outlining the concept of Bitcoin. In 2010, the first commercial transaction takes place in Bitcoin. 3 years after that, in 2013, cryptocurrency exchange UnoCoin launches, making it accessible for Indians to buy and sell Bitcoin. In the same year, Bitcoin rises from $100 to $1,000. Immediately after this, the Reserve Bank of India issues an advisory against cryptocurrencies, warning the public against use of virtual currencies, adding that their prices were a matter of speculation in the absence of backing by an asset or reserves. 4 years after that, in 2017, Bitcoin price spikes sharply from a low of about $2,500 to a high of nearly $20,000. Search interest in Bitcoin goes up to 20 times, according to data from Google Trends. But the regulatory cloud over cryptocurrency darkens, with the RBI and Finance Ministry cautioning the public against the cryptocurrency. The Finance Ministry compares cryptocurrencies with Ponzi or pyramid schemes. A committee comprising Finance Minister, Reserve Bank of India and Securities and Exchange Board of India members is formed to look at the regulation over the crypto asset, and at the same time, 2 PILs are filed against the use of cryptocurrencies in the Supreme Court. After that, in 2018, the RBI issues a circular banning all financial entities from dealing with any entity in cryptocurrencies, effectively banning the crypto asset class in India. This was because the RBI has consistently resisted crypto as it has concerns related to financial stability. The central bank's monetary policy would be less effective if crypto is allowed to move freely. Virtual currencies would also undermine banks and other regulated entities. After the ban, several cryptocurrency exchanges approached the Supreme Court seeking to overturn the RBI's ban on cryptocurrencies. And after that, the Supreme Court did overturn RBI's decision, stating that cryptocurrencies are unregulated but not illegal in India. Fast forward to recent times, interest in cryptocurrencies spikes globally following the COVID-19 lockdown and prices start rising. Bitcoin goes up from about $3,700 to nearly $30,000 by the end of 2020. So that was the timeline and status of cryptocurrencies in India. Now let's move ahead with the most interesting part of this video, that is the Indian government's position. Now note this point and make it clear that there is no law which bans investing in crypto assets in India. But we can't use it as a legal tender, which means we can't buy anything using private cryptocurrencies like Bitcoin and Ethereum in India. The government categorizes crypto as a digital asset and not a digital currency. It has a digital value, but it doesn't mean that we can buy stuff in exchange of that. But on the other hand, we can say that the Indian government wants to regulate crypto and not ban it. By regulating crypto, the government doesn't mean that they will directly regulate private cryptos like Bitcoin, which is next to impossible, but rather they will introduce their own digital currency or digital rupee, which in official terms will be known as Central Bank Digital Currency or CBDC. The CBDC will be a legal tender and equivalent to cash payments. Explaining further, the Central Bank Digital Currency, currently being explored by the Reserve Bank of India for retail and international trade payments, could have a much larger impact on the financial ecosystem, according to industry experts. It will be instrumental in promoting grassroots level financial inclusivity and modernizing the banking sector apart from creating a cashless economy. Now elaborating CBDC in a simple way, central bank digital currencies are digital tokens similar to cryptocurrency which are issued by a nation's monetary authority or central bank. Going into technical terms, CBDC promote financial inclusion and simplify the implementation of monetary and fiscal policy. As a centralized form of currency, they may not anonymize transactions as some cryptocurrencies like Bitcoin and Ethereum do. Apart from India, many countries are exploring how CBDCs will affect the economies, existing financial networks and stability. Now talking about advantages of CBDCs, the first obvious advantage is that CBDC will be backed by the Central Bank of India and hence it will be more safe and reliable. After that, the CBDC will have the potential for a more efficient payment system in areas where managing currency is expensive. Apart from that, because CBDC does not require users to have a bank account, it has the potential to increase financial inclusion. Now, an obvious question arises: what will be the difference between digital payments like UPI or Unified Payments Interface, Google Pay, Paytm, etc., and CBDC? Well, answering this question, currently UPI payments are made using the digital equivalent of existing currency notes. That means every rupee transferred via UPI is backed by a physical currency, whereas the CBDC will be a legal tender in and of itself and need not necessarily be backed up by a physical currency. Apart from that, the digital rupee or CBDC will be operated by RBI and not by bank intermediaries in the case of UPI, where each bank has a different UPI handler. Now let's talk about the main issue which brought uncertainty on whether cryptocurrency will be completely banned in India. And before we jump into any conclusion, let's discuss these points. Point number 1. The crypto asset in India are currently estimated at around 45,000 crores with about 20 million investors. So it feels like this market is too huge, and given its economic importance in the near future, investing in it is unlikely to be banned. Point number 2. Finance Minister Nirmala Sitharaman announced that 30% tax will be levied on any income from the transfer of any virtual digital asset. Seeing this, some crypto players welcome this move, as 30% tax is the first step towards regularization. For a few months now, many crypto investors have been demanding clarity on taxes, and they say that this taxation is a step in the right direction. Finance Minister's announcement in the budget presentation largely ends the uncertainty over the future of cryptos in India. She also proposed to provide an additional 1% TDS, which is tax deducted at source, on payment made for the transfer of virtual digital assets. TDS means that if you buy 100 rupees worth of cryptocurrency, you will have to give 1%, that is in this case 1 rupee, to the government as transaction charges. And point number 3, crypto investing has gained momentum across the globe this year, and India was no exception. Recent data suggests that the world's second most populated nation is likely to be very big player in the global crypto market. The Indian cryptocurrency market has been growing exponentially over the last few years and is expected to reach up to $241 million by 2030 in India and 2.3 billion by 2026 globally. Also, CoinDCX, the Indian company which grew to a valuation of $1 billion, is a startup which grew in the crypto industry. So considering these facts, the government has to think 100 times to ban crypto, which is highly unlikely. Now, many of us will think that if the cryptocurrency market is so huge and is filled with opportunities of making money and improving the economy of the nation, then why the Indian government acts like a bottleneck and is skeptical about this emerging field? Well, there are multiple reasons for it. Let's quickly discuss that. Reason number 1 are illegal transactions. Since the privacy and security of cryptocurrency transactions are high, it's hard for the government to trace down any user by their wallet address. Giving example, Bitcoin has been used as a mode of payment during many illegal deals in the past, like buying drugs on the dark web. It has also been used by some people to convert their illicitly acquired money. Reason number 2 are the unregulated cryptocurrency markets. Though the biggest advantage of cryptocurrencies is that they can function without the existence of a central bank that coordinates their activities, however, this is also the biggest disadvantage of these investments. Since there is no central bank or exchange which mediates all transactions, most of them are irreversible. After that, there is no centralized party or government which enforces its value. The value of the coin is purely determined by the value which investors place on it. Hence, if the investing community were to lose interest in a particular cryptocurrency because of any reason, the units of that currency could become worthless overnight. Reason number 3 is the high consumption of energies. Though this reason is less of a concern to the government, it carries importance because mining cryptocurrencies require plenty of computational power and electricity input, making it highly energy intensive. The main culprit during this is often Bitcoin. Mining Bitcoin requires advanced computers and plenty of energy. One cannot do it on ordinary computers. Major Bitcoin miners in developing countries use coal to produce electricity, which has increased carbon footprint tremendously, which is of course harmful for the environment. The legal status of cryptocurrencies varies substantially from one jurisdiction to another and is still undefined or changing in many of them. Whereas in the majority of countries, the usage of cryptocurrency isn't itself illegal, its status and usability as a means of payment varies with differing regulatory implications. While some nations have explicitly allowed its use and trade, others have banned or restricted it. Giving example, El Salvador is the first country to recognize Bitcoin as a legal tender, which means we can buy things in that country using Bitcoin as a currency. Countries like the United States, United Kingdom, Canada, Singapore do not recognize cryptocurrencies as a legal tender, but it is legal to invest in it. Also, countries like Australia and Japan treat it as property, but countries like China and Bangladesh completely ban cryptocurrency and considers it illegal. Now coming to India, as explained earlier, cryptocurrencies like Bitcoin are not a legal tender and will never be one. But the government is working on a bill which will be focusing on cryptocurrency. The government has not clarified when the bill will be introduced in the parliament, but this bill will bring in more clarity on how Indian government views cryptocurrency and what policies and laws it plans to introduce in it. Most probably the news will be positive for all the cryptocurrency investors in India. So that's it for this video, and if you find this video informative, then please like this video and subscribe to the channel. Hope you have a good day and thank you for watching.